Well, January natural gas futures surged on Wednesday following the early release of the weekly EIA storage report, moved up a day ahead of the U.S. holiday. The report showed a withdrawal of 11 billion cubic feet, a noticeably larger draw than the market's expectation of around 5 billion cubic feet, yet still well below the 5-year average pull of 25 billion cubic feet for this period. The data offered a mixed signal, slightly tighter than traders anticipated, but not enough to suggest any meaningful shift in broader demand trends. Weather models are adding fresh momentum to the rally, with the American model tacking on roughly 15 heating degree days to its December outlook. National demand is set to spike to strong levels late this week and persist into next week as a series of frosty systems push across the northern and central U.S. A brief warm spell is still projected for the December 6th to 12th period, but even there, the latest overnight runs leaned a touch colder, trimming some of that expected softness. Nevertheless, production continues to hover near a robust 110 billion cubic feet per day. Still, the increasingly chilly forecast is nudging market sentiment toward expectations of tighter balances as December unfolds. Meanwhile, across the Atlantic, the tone in Europe offers little justification for the bullish mood in U.S. gas markets. European prices eased another 1%, with the Dutch TTF benchmark drifting toward €29 per megawatt-hour, a level that hardly signals tightness. Sentiment there has been pressured by renewed optimism around Ukraine-Russia talks and by forecasts showing a milder start to December, both of which have softened demand expectations. Storage across the EU remains close to the 90% target for December 1st, and the warmer outlook could even allow for modest additional injections. Analysts also warn that the widening spread between European and Asian prices threatens to erode the incentive for LNG suppliers to prioritize Europe. If that imbalance persists, Europe may attract fewer cargoes, an outcome that further undercuts the narrative that U.S. gas is justified in pricing itself at a significant premium. The near-term setup for U.S. natural gas continues to tilt bullish, driven by increasingly colder December forecasts, a relatively supportive storage backdrop, and rising expectations for stronger heating demand. These factors are giving traders enough justification to lean into the upside, at least for now. A decisive break above the 200-day moving average near $4.73 would help solidify bullish momentum and signal that buyers are gaining control. On the downside, the 50-day moving average around $4.36 stands out as the critical support zone, a level that, if lost, would raise doubts about the durability of the current rally. Don't forget to drop a comment, hit that like button and support the channel if you'd like to help keep this channel going. See you in the next one.